After a really turbulent 2025 that saw the BC housing market basically slow to a crawl, the big question on everyone's mind is what's next? Is 2026 going to bring a recovery or just more of the same? Okay, let's dive right in and unpack what the experts are actually forecasting for the year ahead.
To really understand where we're going, we have to get a handle on just how slow 2025 was. And this number, well, it says it all. 25 years. That's the last time home sales volume in Vancouver was this low. I mean, it was a truly historic slowdown, and it left a whole lot of people just sitting on the sidelines.
This quote from Brendon Ogmundson, the chief economist over at BCREA, just hits the nail on the head. It perfectly captures the mood of 2025. There's just so much economic fear in the air, all driven by these headlines that created this deep, deep sense of uncertainty for families all across the province.
So what was it really? What was the one thing that pushed so many potential buyers to just wait it out? Well, it really boils down to one incredibly powerful force that pretty much dominated the entire year.
Yep, the main culprit was just paralyzing uncertainty. All this constant talk of potential U.S. tariffs, a looming recession, it made people genuinely afraid for their jobs. And look, when you're worried about your income, making the single biggest purchase of your life is probably the last thing on your mind. So what did people do? They just hit pause.
Okay, so how do we actually get things back on track? Well, according to economist Brendon Ogmundson, the recovery for 2026 needs a very specific three-part recipe to work.
And here they are, the three essential ingredients. First, you've got to resolve that crushing uncertainty we were just talking about. Second, we need a stable or, ideally a growing economy. And third, we need some help from interest rates. So the big question is, what's the forecast for each of these?
All right, so for that first ingredient, uncertainty, the outlook is surprisingly positive. It really seems like the worst of the trade war fears are starting to ease up. And with the Canada-US-Mexico agreement, you might know it as CUSMA, up for renegotiation, there's a pretty clear path to calming things down. That should bring a whole lot more confidence back into the market.
Now for the second ingredient, the broader BC economy. The outlook here is, well, neutral at best. Forecasters are calling for another year of really slow growth, somewhere around 1.3%. And that's because we're facing a few headwinds, like slowing population growth and even potential cuts in government spending, which has been a huge driver of the economy lately. And the final ingredient, interest rates. Yeah, homebuyers probably shouldn't be holding their breath for any help here. The Bank of Canada is pretty much expected to stay on hold for most of 2026. And believe it or not, some fixed mortgage rates have actually started to creep a little bit higher. So no relief on the horizon just yet. So here's the crucial takeaway. With only one of those three ingredients really looking positive, the 2026 recovery is gonna be a slow grind. It's not gonna be fueled by some hot, booming economy. Instead, it's going to be driven by the sheer number of buyers who've been waiting on the sidelines, finally deciding, okay, it's time to get back in the game.
But here's where things get really interesting. This slowdown wasn't some uniform story across all of British Columbia, not at all. In fact, 2025 created this really clear divide, a tale of two very different markets inside the same province.
I mean, just look at the data. It really tells the whole story. At the absolute lowest point of the market in 2025, sales in Metro Vancouver were down a staggering 30% compared to the 10-year average. But at the same time, the BC Interior and Vancouver Island, they were only down about 15%. Metro Vancouver literally got hit twice as hard.
So you gotta ask, right, why the massive difference? What was it about Metro Vancouver that made it so much more vulnerable to all the economic fears of 2025? Well, the answer really comes down to the fundamental differences between these markets. You see, Metro Vancouver has a much, much higher price point, which makes buyers there way more sensitive to economic fear and job uncertainty. It's also a market with more investors, and they tend to run for the hills pretty fast when things look shaky. In contrast, markets in the rest of BC are driven more by end users, people buying a home to actually live in, and they were just less spooked by it all. Okay, so let's zoom out for a second. Beyond the immediate ups and downs of sales, there's a much bigger, much more long-term problem brewing just beneath the surface, and it's a looming supply crisis that could honestly define our market for the next decade. And you're not going to believe this, but the biggest problem is actually a glut of supply.
Specifically, we're talking about the number of newly built but unsold homes, especially condos. It's now at its highest level in over 20 years. And while that might sound like great news for buyers, it could actually trigger a really dangerous chain reaction.
If you want to understand why that's so dangerous, all you have to do is look at our own recent history. The last time we saw a spike in unsold inventory like this was way back in 2008. So what happened? In response, developers just stopped building. Fast forward to 2015, and this had created a severe supply shortage. And when demand finally came roaring back, prices went through the roof. We are literally setting ourselves up for a repeat of that exact same cycle.
So, with the slow recovery in the forecast and a potential supply crisis on the horizon, are we just stuck? Well, not necessarily. Let's take a look at a few things that could actually change the game.
Economists have pointed to several policy levers that could help. At the federal level, they could tweak the foreign buyer ban, maybe let them buy new construction, kind of like Australia does, or they could get rid of that mortgage stress test buffer. Provincially, things like the speculation tax could be looked at again to make sure they're encouraging, not discouraging, the investment we need to build new homes.
But of course, there are also risks out there that could make things even worse. The biggest one is what's called an exogenous risk. It's basically a huge shock that comes from outside our borders. And for British Columbia, our economy is so deeply tied to the United States that a recession down there would be the single biggest thing that could completely derail any recovery we have here.
And all of this leaves us with one final and really crucial question. When you look at these patterns, these slow sales, followed by supply shortages, followed by massive price spikes, are these wild swings just an inevitable permanent feature of BC's housing market? It's something for all of us, whether we're homeowners, buyers, or policymakers, to really think about.